With Adobe CEO resigning and the stock down, I thought this would be an excellent time to run the stock through the Pulse framework to see if it's interesting. Just a quick reminder, Pulse stands for economic profits, underlying free cash flow, leverage, smooth free cash flow yield, and EV cap rate. If you want to check out the framework further, link is in the description. And with that, let's go. I'm going to switch to the Excel and let's check it out. So you can see here that the framework is starting empty, just so you don't think I'm pre-populating these. And let's type in the ticker, which for Adobe is ADBE. And if we give it a few seconds for the data to pull in, you should start seeing it any minute. Here we go. So we're going to go through the old elements. First, the P is economic profits. So this is this chart in the upper left, and it's looking pretty good. You can see the economic profits, at least over the last decades, are positive, which is important, and rising, which is even better. So that's an excellent picture right there. Next, the U, which is the underlying free cash flow, it's positive and rising, which is great. And the free cash flow conversion to net income is close to 100%. That's excellent as well. Now let's jump to the leverage, which in this case is pretty easy. You can see right here, there's actually almost no net debt. So that's, again, an excellent characteristic right there. If you look at the S, right here, I have two versions. I have the 7-year average, which is the one I use as the primary, pulled forward to a 12-month basis. And I have a longer average, and that's for the purposes of looking at a longer full cycle history. But let's focus over here. And 7% free cash flow yield for a company that's been growing double digits cycle to cycle, that's interesting. It's not off the hook cheap, but it is interesting. And lastly, let's look at the EV cap rate. Again, that's using the last 12-month data, and unlike the free cash flow yield, you can basically see we're using enterprise value as opposed to just the equity. And again, that's 7%. That's also pretty interesting. So if I were to summarize, we have good economic profits, good free cash flow, no net leverage, and warm, if not hot, valuation metrics in the smooth free cash flow and EV cap rate. So for me, Adobe is, yes, it's interesting for further research. By the way, just to be clear, just a reminder, this does not mean that you should go out and buy it right now. This just means that I think it's interesting for further work, and there's a lot more work to be done to determine whether it's a buy or not. So with that, if you want to grab this exact template, the link is in the description, so check it out. And if you want a specific company put through the Pulse framework, just leave a comment and we'll add it to the pipeline. See you in the next video.